Hello everyone. This week, I'll be bringing you the latest outlook for the financial markets. How will the markets move this week? Let's dive right in. This week's theme is the financial market where magma is building up. Despite the calm on the surface. Despite the calm appearance on the surface, the market is storing a significant amount of energy as it awaits a series of major events. This prediction is based on an analysis using statistical methods of exchange rates, interest rates, and other financial products from 17 markets over the past 200 weeks. Let's begin by looking at this week's convergence point, the profit-taking target level. USD JPY is 153 yen and 51 sen. EUR JPY is 178 yen and 74 sen. AUD JPY is 100.40. The Nikkei 225 is 48,598 yen. The Dow Jones is $46,594. The 10-year JGB yield is 1.89%. Gold is $4,128. We expect the market to gravitate toward this zone. Stock and bond market moves. In the U.S. equity market, strong expectations for lower interest rates continue to support high valuations. Similarly, in Japan, the Nikkei average remains in the 50,000 range. With a December rate hike by the Bank of Japan being almost certain, the 10 JGB yield has climbed to 1.93%. As Japanese government bonds become increasingly attractive, there is a possibility that investors will accelerate the shift of assets from foreign bonds to domestic bonds. Under normal circumstances, this would generate upward pressure on the yen. However, if the market expects interest rates to rise further, the yen could continue to weakening instead. FX market USD JPY lacks clear directions. Market consensus is that the BOJ will raise the policy rate by 0.25% on December 19th. In theory, this should push the yen higher. Yet last week, USD JPY fell to the low 154 range but rebounded to the 155 range by the weekend. The market lacks clear direction and is essentially waiting for major events. Key events in December. The upcoming schedule of dates and economic indicators is as follows. December 10th FOMC, December 16th U.S. Employment Report October and November, December 19th BOJ meeting. If U.S. rate cuts and Japan's rate hikes are already priced in, the factor most likely to serve as a true catalyst may be the U.S. employment data on December 16th. However, private surveys such as ADP already indicate a deterioration in labor conditions. Therefore, weak employment numbers may also be largely priced in. Magma building beneath the market. Ahead of these events, trading activity is declining, and the market is struggling to find direction. Big investors waiting to strike, individual investors guided by wishful thinking, reduced trading ahead of evens. These conditions are causing a magma-like pressure to accumulate beneath the surface. The market is stagnant, accumulating energy, and it's difficult to determine which direction it will move in. Watch out for SQ effects. In addition to the events, we must also pay close attention to the SQ special quotation. SQ will be finalized on December 12th in Japan, on December 19th in US. The last trading day will be the Thursday before each respective date. For Japan, The day 2 days before the SQ announcement, December 10th, is known as the Witching Wednesday, a day when the market tends to sell off. Historically, many sharp rises and crashes in the Nikkei average appear to be linked to strategies targeting the SQ. Need to watch which side the eruption flows. From this week into next, it will be a crucial phase to watch which direction this accumulated magma eventually flows. If USD/JPY surges significantly toward yen weakness, we need to consider the possibility of FX intervention or even coordinated Japan-US intervention. The equity market will likely start the week firm, supported by US stock gains. But this should be understood as merely the calm before the storm. Please note that the above predictions are based solely on a stable convergence model derived from statistical analysis. And we accept no responsibility for the results of any investments made based on these predictions. In the future, we will continue to provide forecasts based on data and statistics. I would be happy to see you again. That concludes this week's outlook for the financial markets. Thank you for watching.